VOO versus VTI, which is a better investment choice. So guys, the truth of the matter is, whether you're investing in VOO or you're investing in VTI, there is no significantly better choice. Both of them have performed slightly the same over the longest period of time. Yes, there's been variations here and there, but they are insignificant. They are almost negligible. First of all, if you don't know what ETFs are, I'll be linking this video up here, so you should watch it. It will really help you understand what we are discussing here today. So VOO and VTI, in short, are ETFs. They are exchange traded funds, and an ETF basically is a basket of individual stocks. So instead of investing in just one stock, you're investing in a basket of stocks. The good thing about ETFs is that it gives you that leverage to diversify your investment. So instead of having to handpick multiple stocks, you just have a basket of stocks that you can invest in at one go. VOO tracks the S&P 500. That means it tracks the 500 largest companies in the United States of America. Whilst VTI, on the other hand, it tracks the largest, mid-sized and smallest companies in the United States of America. It tracks up to 3,500 to 4,000 stocks. So this is the first fundamental that you need to know about the difference between both of them. Now moving on, both of them have a 0.03% expense ratio. And what that simply means is, for ETFs, the managers of those ETFs, they usually subtract a certain percentage of whatever assets that it is that you own or you have, right, in any of those ETFs, and they subtract that money to manage the ETFs. Both VTI and VOO, they both have the same expense ratio. So what that means is, if you own like $10,000 in a VOO, for instance, or a VTI, for instance, over the course of 1 year, because this expense ratio is subtracted annually, so over the course of 1 year, that means they'll be subtracting $3 from what you own or what you have with those exchange traded funds. Both of them are also referred to or regarded as low cost index funds. So you might now ask me that, which one am I investing in? Good question, if that's what you're thinking. Very good question, and we don't get skip over here. Personally, I chose to invest in VTI. Reason being that I already hold individual stocks in, tech companies like Apple, Amazon, Meta, Nvidia. I decided to invest in VTI because I wanted a broader exposure. I wanted diversification into the entire market, seeing that VTI already tracks up to 4,000 companies in the US, which consists of the large companies, the mid-sized companies, and the small-sized companies as well. So that's my own reason for choosing VTI. Overall, there is no bad option. Whether you go with VOO or VTI, I think it's just a matter of personal decision. There's no significant difference in the rate of their performance. Sometimes VOO tends to bring slightly more return than VTI, right? But it's never a huge margin. It's always like a margin that you can actually just ignore. It's really nothing serious. You probably would see the numbers on the screen right now around the differences between both of them, the historical differences between both of them. I'll just leave that on the screen for you to see. If you've been dilly-dallying or you've not made that decision yet because you're trying to be too careful, you're trying to figure out which one is the right one, I will just say go with any of them, right? You're going to get pretty much the same returns whether you choose VTI or you choose VOO. There's no significant difference. The only thing that you might want to be a bit concerned about is the price. VTI is currently selling at $371, while VOO is selling at approximately $693. So, depending on how much more money you have, if you have more money that you're willing to let go of, you can buy VOO. But if you're more constrained with the amounts that you have, you can buy VTI. But really, that's like the main thing to actually consider and the main thing to take note of. But yeah, guys, if you have been hesitating on purchasing any of these ETFs because you're trying to figure out which one is the right one, I'm just here to tell you that there is no perfect one. Just buy any one that you can afford, right? Leave it for a couple of years and allow compounding do its magic. Alright guys, thank you so much for watching. If there's any topic around investing or around the stock market that you'd like me to speak about, please leave a comment in the comment section, and I'll do well to speak about it in my subsequent videos. Don't forget to like, don't forget to share, don't forget to subscribe, and I'll see you in the next one. Bye guys.